Oil prices continue to hold the range, that 55 to 60 range we've seen for pretty much most of July. Outside of a little bit of a bid above the highs and a little bit of a sell-off below the lows, it seems to be kind of holding in that 56 plus area as we speak. And I think right now the fundamentals will start to play a bigger role. I think if you look at what happened with the inventory declines today, sort of written off as a one-off event due to the storm. So expectations, while they weren't as great as the actual numbers, I think that you can look a little bit past that and say a lot of that had to do with the Gulf storms that we had recently, and likewise would maybe see things revert back to their norm at the next period. Another thing to note was that gasoline demand did not go up, suggesting that there isn't a whole lot more usage. So right now, the numbers today, while they were looking a more bullish to oil prices, didn't really get the sustained trade they thought. And likewise, you heard news of the Saudis and Kuwait maybe reopening production in that area between their countries, something that hasn't happened in a while, which could add 500,000 or more barrels a day. But we haven't had any confirmation on that yet. So again, more to come. It's going to be more about news, I think, than it is about raw supply and demand. And if you look at what the dollar did today, I think the dollar right now has been bouncing higher since last Thursday's low. Recall that New York Fed President Williams spoke and talked about the neutral rate being at 0.5%, much lower than where we are and much lower than where the Fed is ever going to consider putting rates in the foreseeable future. But it was taken out of context, and things have really rallied since that low point, and that continued today. It continues to creep higher and higher. So looking at that dollar-denominated commodity versus the dollar itself doesn't seem to be playing in a historical norm. So right now the dollar bidding is maybe playing a little bit of catch-up. And while we see oil stuck in the range, it's really not having an adverse effect on it. So right now the dollar, it will have an effect down the road, but certainly to this last week or so, we haven't seen that. And lastly, let's look at the speculators and positioning. Spec longs have continued to add to their positions, but it's not a significant level, not one we would look back on and say, wow, these guys are really gobbling it up. And I think there's a couple reasons for that. One, we're going to get a number of central bank meetings this week and next. Obviously, the ECB comes out Thursday. Next Wednesday will be the Federal Reserve. Global growth is going to be a major concern here, and what the expectations are. We've already seen some of the significant world bodies downgrade some of their estimates. And I think at this point right now, if you continue to see downgrades in GDP, global GDP, it's going to have an adverse effect on oil prices. Likewise, I think, though, some of the geopolitical issues that we're seeing, possibly if the U.S. can get its sea legs back under it with a cut or two, I think that could obviously work the other way. So I think you're waiting to see what that next catalyst event could be that would move oil. And so one of the reasons why we aren't seeing significant jumps in open interest is that obviously we have to see those events come and pass. So right now, oil prices still stuck in a range. Anything that would get us north of 60 will quickly be sold at 65. I think anything that gets us below 55 is likewise going to be bought at 50. So the range, while it is set, I don't see us having any sort of breakout moment. Let's get through these central bank meetings. Let's see what happens in the Middle East. And likewise, let's see what happens with this global growth and the U.S. economy. Those could be the keys to higher or lower oil prices in the weeks and months ahead.